But first, our top story takes a look at the terminals of Yellow and how they fared during auction last week. Our finance editor, Todd Maiden, is here to join us with the details. Todd, thanks for joining us today.
Thanks, Anthony. Kaylee.
So, Todd, we saw that auction conclude last week, and we got the release of the information as of yesterday. We saw some pretty big winners. XPO coming out with the both largest bid and the most amount of terminals purchased. Talk to us a little bit about who got what.
Sure. Yeah, so the first wave of the auction process, so Yellowhead was operating more than 300 terminals when it closed, 170 of which it owned. So the first 130 of those terminals were awarded through auction that started last week, concluded on Monday. Went for nearly those awards, those commitments are about $1.9 billion. And XPO, you're right, came out with the most allocations, $870 million across 28 terminals. Really big, thrust forward for them. They've had this growth strategy for a while to add terminals and doors to the network, but this will add about 2,900 doors to their existing network of under 17,000. So you have this, mid-teens capacity increase. When in the past they had hoped, like their multi-year plan was to add 900 doors net over a couple-year period. So they were certainly big in the process. Estes, which had, recall, the stalking horse bid of more than $1.5 billion for all of the properties, they'll end up walking with, it looks like 24 so far, valued at $250 million. And then SIA was also active as well with a big allocation from the process.
And Todd, when looking at this, how much is left over? Is there anything left to bid on? And what does this go towards what was owed for Yellow?
Sure. You're right. The process isn't done. Yellow has 46 owned terminals as well as some lease facilities where you'll have some bidders that'll come in and assume those leases. It looks like there are about 3,200 doors left in the network that will be sold through auction. There's no time frame on when that's going to happen, but that could be, so you had $1.9 billion in the first wave. The next wave could still be a couple $100 million. I guess the assumption, the first wave, it looked like about close to 270,000 per door, where it was the ask price or the way the bids were awarded. So the valuation on those properties about 270,000 per door. You have to think that it's going to be probably much less since those properties haven't gone yet. You have to question, some are in key prime large markets where there's a ton of freight throughput, but you have to question the condition of them. And then is that market already saturated? So, you're probably not going to get that door rate on your next round of bids, but there's still probably a couple $100 million left. And then you also have the liquidation of their, it's 12,000 tractors, 35,000 trailers. That's going to net a couple $100 million. So in total, you're going to be well north of $2.5 billion. And then you're looking at secured debt was over $1.2 billion. You had debtor in possession financing of over $200 million. Then you have some unsecured creditor claims. You don't know how those are going to shake out yet, but it looks like so far a pretty tidy unwind, and most of the claimants, or many, will be repaid.
I think it's a pretty smooth end to what was that very, very rocky end to the summer for Yellow itself. So a lot of these LTL companies who have now purchased these terminals and these dock spaces and these doors have now come out and released some of their kind of mid-fourth quarter reports, thinking about ArcBest and Old Dominion. They're in our headlines today. But it begs the question, is there enough LTL freight out there right now to make these purchases make sense? Or are a lot of these companies maybe kind of betting on the LTL market to kind of turn around in 2024 to make the investment in the Yellow properties kind of worthwhile?
Right, good point. The Yellow's unwind or shutdown came at a time when the rest of the industry could absorb. They had the excess capacity, and that 8-9%, whatever it was at the end, market share could be redistributed across the industry. So if this had happened in 21, it would have probably been a little bit more chaotic, but this is a very manageable unwind for the industry. And you're right, it's capacity that was active, is no longer active, and will be, reopened over the quarters to come. I don't expect it to all, be up and operational in Q1. Much of it will, but it could take into 2025 for that to happen. And then I guess the bigger thing is it's where that capacity ended up. These terminals are now in the hands of, the top three. So XPO, Estes, and Saia. The top three bidders are taking, a little bit more than 1.4 billion in real estate. So the lion's share of the Yellow's portfolio, and they're some of the most disciplined operators in the space. So, best margins, best service, et cetera. So I think what you'll see is that price discipline that most of the industry had that Yellow really didn't have because it lacked on the service end and it couldn't charge premium rates as other carriers have. I think that the thought is those terminals are now in the hand of better operators, better service providers that garner higher pricing, and there isn't going to be, even though we're, to your point, 13 months now into this soft industrial environment, and the manufacturing sector accounts for 2/3 of LTL freight. So you're right. I mean, there is this capacity that's going to be relaunched, but is it in the hands of better, I guess, more disciplined operators that will kind of keep, the pricing level status quo and, margins, et cetera. So I think it's maybe a little bit more rational market, even though this capacity comes back online.
And Todd, keeping on some of those same talking points, do you have any early expectations for what some of the LTL earnings might look like overall, or what some of the expectations are in the fourth quarter?
Yeah, so you're right. I mean, we got Saia, XPO, ArcBest, OD all gave us this week, mid-quarter updates through October, November. And I mean, the numbers are mixed. I mean, Saia, which was the biggest winner from Yellow's shutdown, it was the most aggressive. Their shipments are up 18% year over year. Tonnage, these shipment weights are lighter in part because of the freight mix and because a lot of the freight came from Yellow, but then also because you just do have this soft industrial patch, and those shippers, when you don't have that industrial freight, you skew a little more retail, which are lighter shipments in general, and then some of your industrial customers are also, their shipment counts haven't gone down, but what they're actually shipping per shipment might be less. So the lighter shipment weights has led to lower tonnage numbers, but Saia certainly leading the category there as far as volume. You have to question the mix a little bit and what those margins will look like because of the lighter shipments. XPO's shipments were up mid-single digits. Tonnage was slightly lower, negative in November. And I think, when you look at ArcBest, Old Dominion, a little bit different story there. Their tonnage came in negative, and then it's on top of negative comps from a year ago. The market rolled over at the end of last summer, and those year-over-year declines accelerated through year end. So to put up these negative comps in an environment where you were negative the prior year and you're still negative now, doesn't bode well. But the one thing, I think if you kind of work through OD's numbers and you saw the yields that they have, which are still mid-single digit to high single digit, where they are with consensus, I think it's around 290. I mean, it looks like they're probably going to be able to hit that number through higher yields and cost management. So, I think the two latter, ArcBest, OD, really playing that long game of terminal additions, not jumping full force in, but numbers so far appear, the mid-quarter updates weren't great, but numbers appear okay at this point.
And of course, we'll get the full picture once the calendar turns and we get both Q4 and full year earnings from those guys. Todd, thank you for joining us this morning. Great to talk to you as always, and we'll hear from you soon.
Thank you. Thanks, guys.